Time now for our stock of the hour. Workday, one of the few companies that are on the downside at the moment in the S&P or indeed the Nasdaq. Shares you see off by 3.5%, let's call it. Investors, they were disappointed by the human resources software company and its subscription revenue guidance. It was unchanged in the latest report. Many want to see it up revised. Now, with the software sector seeing significant amount of pressure recently, I want to bring in Anurag Rana with Bloomberg Intelligence. So interesting, over in Europe, we've seen a real jitter in software, people worrying that generative AI was going to eat its lunch. What were we seeing out of Workday and others in the software space today?
See, I think that is a very big overhang on the entire sector, not just software, but consulting as well. But at the end of the day, I mean, the bottom line is you're not seeing seat growth, which is the companies where all these software companies are selling their software to, whether that's Workday with their HR software or Salesforce with the CRM software, those companies are not hiring at the pace that they were hiring. So, you know, for a company that was growing, let's say for the sake of discussion, between 15 and 20%, that growth rate has come down. And frankly speaking, it has impacted lower end companies or companies that sell into the small and mid cap or the mid market more than it has somebody like a Workday, which is selling to enterprises. You know, frankly speaking, we thought the results were very good, 15% growth in backlog, but it seems, you know, that wasn't good enough. They're probably looking at 100 basis points or so.
Yeah, what does it have above, you know, say an Intuit or even an Adobe, Anurag? How can it maintain its moat?
See, Adobe is a very different animal because that's where a lot of the AI tools are generating some of the images. So there is an absolute, you could say, you know, paranoia on the street about owning that stock. But when you look at somebody like an HR software like Workday, you know, that's a system of record. That's where all of our, you know, employment and all the, you know, history goes in. I find it very difficult. A large company would just let an AI agent do that without, you know, any checks and balances. So we are not in the camp that somebody like a Workday or CRM is going to be disrupted that easily. You know, we have a similar view on Adobe as well, but Adobe has a lot more to prove on their side than some of these other vendors.
It's interesting, just Intuit had a similar issue today, just to reference another company that's on the downside in particular, because that's all about tax and that's all about efficiency there, but they too didn't live up to expectations. And a lot of these companies, valuations, not as much as in the hardware space, but have been priced to perfection a little bit more. People have been this week in general questioning valuations, Anurag. How much is that speaking to the revenue growth you need to see in earnings?
Frankly, if you see somebody like a Workday or a Salesforce, they've already seen a massive decline over the last 6 months. I mean, people have brought in valuations a lot. You had mentioned Adobe. You know, I haven't seen that valuation ever in that particular stock. There was a time when it was trading, you know, above Microsoft. So I think valuations are already there. The question is, what is the catalyst that moves the growth rate upwards? And perhaps, you know, a rate cut could be it. I mean, if we see a subsequent rate cut, if we see the tariff-related uncertainty drop, maybe in 2026, we will see that seat growth everybody is looking for, and then a rebound in growth rates. And, you know, that's when the sector recovers.
Huge competition for government and education as well, Anurag. Can it continue to make advances there and maybe quicken those up?
Yeah. See, but one of the things is in certain areas, you don't have a replacement for somebody like a Workday. Workday is, you know, north of 60% of Fortune 500 companies, which is, you really are not seeing anybody else coming out and taking market share away from them. But at the same time, if you're already growing 15% and the customers are not hiring at that same pace, you're not going to see that user count or the seat count growth. I think they've already managed or executed very well compared to, you know, some of the other companies. But at the same time, you know, you see a slight hesitancy and the market's going to punish you.
Just give us a read on, therefore, the business desire to be putting more money to work in software more broadly. Zoom today having actually a lovely day because more people are seeing that the AI is giving them the productivity and willingness to spend more on that particular application. But we've been questioning all along this week of the MIT report and the fact that these AI pilots aren't working. What do you think, Anurag, about the willingness of service companies to spend right now in software?
So when you look at it, there is a complete bifurcation. If you have an exposure to AI infrastructure spending, you know, if you are the likes of Microsoft, Oracle, or CoreWeave, you are seeing your fundamentals improve. Almost everybody else is seeing fundamentals decline because the non-AI tech spending has been under pressure since beginning of 2023. One of the stats we talk about a lot is, you know, a company like Microsoft, over the last 3 years, They have increased their revenue 42%, but not so much the employee count.
All right, Anurag Rana, thank you so much with Bloomberg Intelligence. Much appreciated. This is The Close on Bloomberg.